Great pleasure to be here, of course. As Matthew said, I'm going to briefly introduce you to NextEnergy Solar Fund, ticket code NESF, and the opportunity for investors to capture total returns through direct investments in solar energy and energy storage. But before we do that, some important housekeeping. Don't worry, I'm not going to read you all the small print here. There are three main things to be aware of. NextEnergy Solar Fund is a closed-ended investment company, and its shares are traded on the London Stock Exchange. This presentation is for information purposes only. It's not financial advice. And as with any equity investment, your capital is at risk. Values can go down as well as up. And if you're unsure about whether an investment is right for you, please do seek independent financial advice. So, without further ado, let me introduce myself. As we mentioned, my name is Stephen Rosser. I'm the investment director responsible for NextEnergy Solar Fund. My role encompasses everything from designing and implementing our investment strategies, engaging with our investors, and making sure our assets and our investments within the fund are performing as they should. Over the next 15 minutes or so, I'll cover an overview of NextEnergy Solar Fund, the value add of NextEnergy Group, and an outline of the fund's portfolio, the current market opportunity we see for investors, and future opportunities for the fund, and how we are positioning it for growth. So, let me introduce the fund. NextEnergy Solar Fund is a leading solar and energy storage investment platform. Its investment objective is to provide shareholders with attractive risk-adjusted returns from a diversified portfolio of utility-scale solar and energy storage infrastructure assets. Through its portfolio, the fund offers investors an attractive dividend yield and significant prospects for capital growth. The fund is a FTSE 250 company, and its investors are playing a vital role in supporting the transition to a clean, affordable, and secure energy system. NextEnergy Solar Fund has a really strong track record of delivering a reliable and attractive dividend for its investors. In fact, since coming to the market in 2014, the fund has declared dividends in excess of £350 million. The current dividend target is 8.43 pence per share. That represents a dividend yield of about 12% at the moment. And we expect that to be 1.1 to 1.3 times cash covered within the financial year. So let's take a look at how we generate value and also learn a little bit more about the portfolio. NextEnergy Solar Fund is managed by NextEnergy Capital and benefits from a deep and long-standing relationship with a wider NextEnergy group. NextEnergy Capital itself manages $4.5 billion worth of solar and energy storage assets around the world, and it has an enviable track record of creating and capturing value for investors, going all the way back to 2007. Working alongside NextEnergy Capital, Wise Energy is one of the largest specialist solar and storage asset managers in the world, managing 3.2 gigawatts of operational capacity globally. For NextEnergy Solar Fund, it provides a turnkey asset management service. That includes everything from making sure the assets come online in the morning, optimizing their performance, and also producing reporting and accounts. The NextEnergy Group has over 17 years of corporate experience across the full life cycle of solar assets. We use that experience and expertise to drive financial, technical, and operational outperformance at every opportunity. There are over 350 professionals across the NextEnergy Group, with specialists covering everything from planning and grid connections, procurement and construction, asset operations and power sales, as well as investment management. And I think some of you might have met some of the team who are with me here today. We use our scale and our extensive network of relationships across the value chain to create economies of scale from which the fund is able to benefit day in and day out. Our Starlight division also generates opportunities for the fund. Starlight is a greenfield and brownfield developer of renewable generation and energy storage projects, with a pipeline of over 10 gigawatts globally under development. NextEnergy Solar Fund has the right to make the first offer on Starlight projects that fit the fund's investment objective. NextEnergy Solar Fund has 101 operating assets, with a combined operational capacity of 934 megawatts. That's enough to power roughly 380,000 UK homes every year. Most of the fund's assets are in the UK, with small amounts of capacity in Italy, Spain, and in Portugal. On average, the fund's assets have a residual life of around 25 years. And we expect, over time, the majority to be extended beyond that, in line with the evergreen nature of the fund. The fund has also invested $50 million in a private international solar fund called NextPower 3. This investment brings some of the higher returns from NextPower 3's international strategy into the fund's perimeter, and has also allowed the fund to co-invest directly into assets in Spain and Portugal, alongside some of the largest infrastructure investors in the world. Altogether, the gross asset value of the NextEnergy Solar Fund is around £1.1 billion. The core of NextEnergy Solar Fund's revenues are derived from index-linked government subsidies. These account for just over half of the fund's revenues, providing stable and reliable core cash flows that underpin everything we do across the fund. The balance of revenues come from selling the clean electricity we generate to a few different types of buyers, mainly utilities and also some major corporates. Power sales are managed by NextEnergy Capital's specialist energy sales desk. The team uses its deep knowledge of energy markets and energy trading to sell forward small clips of power, building up a hedge position over time. This approach allows the fund to lock in attractive prices whilst also reducing exposure to wholesale price volatility, providing strong visibility of future cash flows. We can take a look now at how those cash flows translate into shareholder value by looking at the interim results for the 6 months to September 2024. Over that period, the portfolio generated 595 gigawatt hours of clean electricity and also realized a profit on the sale of some investments. Net of portfolio costs, the reported income of NextEnergy Solar Fund for the period was £45 million. Deducting the operating expenses and financing costs of the fund leaves £37 million of net cash available for distribution. £25 million of that was paid out in dividends. The surplus was used to reduce short-term debt, buy back shares, reinvest in the health of the existing portfolio, and fund some investment towards future growth. I mentioned that we see a current market opportunity for investors, so let's explore that a little bit now. Since coming to the market in 2014, NextEnergy Solar Fund has delivered total returns of around 40%. Every quarter, it publishes its net asset valuation, or its NAV, using data from independent external sources, such as ONS, HM Treasury, and third-party power market consultants. Over the last 2 years, we've seen a number of solar and storage assets being bought and sold, including successful asset sales by the fund itself. In each case, the assets were sold at a premium to the fund's NAV, providing confidence that the NAV is a fair reflection of the assets within the portfolio, potentially even with opportunities to the upside. By contrast, shares in NextEnergy Solar Fund currently trade at a 29% discount to the NAV, in line with most peers across the sector. The transactional data points demonstrate clearly that the discount is unjustified and that the share price does not reflect the underlying value of the portfolio itself. So if the share price discount is not driven by what's going within the fund, what has been driving it? The short answer is inflation, increases in the Bank of England base rate, and their combined impact across the whole economy. For investment companies in particular, this has led to compounding challenges on 3 main fronts. Firstly, typical holders of investment companies, such as wealth managers, have been liquidating some of their positions to fund redemptions as their underlying investors deal with the cost of living crisis. Secondly, institutional investors have been steadily withdrawing capital from UK and investing elsewhere in the world. And finally, increasing UK gilt rates have attracted some of the capital that might otherwise have looked to infrastructure investments for long-term, low-risk returns. Together, these macro conditions have driven some types of capital away from small and mid-cap listed investment companies. And you might say that the investment company sector as a whole has fallen a little bit out of fashion. However, very important now that we are seeing signs that that tide is starting to turn. There are a number of compelling macroeconomic reasons for that. For example, latest forecasts show inflation heading back towards the Bank of England's target range, supporting the outlook for phased reduction of the base rate and a tightening of gilt yields. International investors that we talk to elsewhere in the business tell us they now see opportunities in UK equities and are starting to direct capital towards undervalued stocks with strong fundamentals, such as NextEnergy Solar Fund. Changes to cost disclosure rules for investment companies should also remove artificial distortions for investors, and potential changes to pension fund rules should also make it easier for them to invest more aggressively in the energy transition. And above all of that, the government has laid out ambitious plans to achieve a clean power grid by 2030 and to hit net zero by 2050, for which capital will need to flow at significant scale across equity, debt, and private markets to deliver the capacity we need. These are really important tailwinds, which we expect to add momentum to the share price over the months ahead. Putting all of that together, savvy investors, such as yourselves, might well conclude that the current share price is an attractive entry point and that the current level of discount might not be around for much longer. Even though the drivers of the discount are all macro-related, as a proactive investment manager, we remain focused on doing what we can to narrow it. For example, shortly following the mini-budget in 2022 that I'm sure we'll all remember, we recognized that discounts might become a bit stubborn and that it would be important to provide visibility of the fund's plans for navigating the evolving investment environment. We initiated and announced a program to recycle capital from certain investments, through which we've released £72.5 million so far, enabling the fund to reduce short-term borrowings by £46.3 million, on top of the cumulative repayment of £60.4 million of long-term debt, which is funded from operational cash flows. In addition, the fund has implemented a program to buy back up to £20 million worth of its shares and has bought back around 14.2 million so far. Turning then to future growth potential. Although NextEnergy Solar Fund has not been immune to the macro challenges that have impacted the whole investment company sector, the future for the fund is very bright. I was going to say no pun intended, but actually the pun is very well intended. Solar is the cheapest and most sustainable form of energy generation which can be deployed at speed to support the transition to a clean, affordable and secure energy system. Energy storage will play a vital role as part of the evolving energy ecosystem and is highly complementary to solar PV, hence being a key component of the fund's current and future strategy. As I've touched on already, the UK government's Clean Power 2030 plan provides a supportive policy backdrop for rapid deployments of renewables and energy storage, from which the fund is very well placed to benefit. To put the fund in the best position to harness that opportunity, we have built a proprietary pipeline of near-term opportunities to put over £500 million of capital to work across a number of new solar and energy storage projects. This pipeline is exclusive to NextEnergy Solar Fund and distinct from the 10-gigawatt pipeline being developed by our Starlight division. The combination of policy environment, the economic outlook, and the opportunity set we have built within the fund create a really exciting future. And the team and I are highly motivated to start unlocking that potential and driving significant further value for investors over the years ahead. So I think that brings the presentation to a close. Thank you all for coming. It's been great to see so many of you here. Thank you to the Master Investor team also for the opportunity to present to you. If you have any follow-up questions, the team are sitting actually just here in the third row, and you can find us at the NextEnergy Solar Fund stand in the Investment Trust Village. Thank you so much.